Welcome back to our podcast. Today we're diving into the current state of global markets, particularly as we witness significant declines while investors hold their breath for key earnings reports and economic data. Joining us to unpack everything from major tech news to the broader implications of policy and corporate volatility is our esteemed guest, a financial analyst with years of experience navigating these turbulent waters. Thank you for being with us today.
Thank you for having me. It's a pleasure to be here and discuss these crucial topics. There's a lot happening right now in the markets that we need to unpack.
Absolutely. Let's start with the market declines. We've seen some significant drops recently, particularly in major indices. As of today, the S&P 500 is down about 4% for the month, largely due to concerns over upcoming earnings and economic data. What are your thoughts on this situation?
The declines you mentioned are indeed alarming. Investors are often skittish ahead of earnings season, especially when global economic indicators are uncertain. Companies are facing pressures ranging from rising interest rates to supply chain disruptions. The anticipation of earnings reports can create a lot of volatility, as you noted, and this time around, the stakes feel particularly high.
Right. It seems like everyone is on edge about what the tech giants will report. Companies like Nvidia, Amazon, and Alphabet are at the forefront of many discussions. Nvidia, for instance, has been a powerhouse lately, but recent reports suggest a possible slowdown in demand for its GPUs. How do you think this will impact the market?
Nvidia is an interesting case. While it has dominated the AI and gaming industries, any sign of slower growth could lead to a significant reevaluation of its stock price. The company's last earnings report showed robust growth, but as demand fluctuates with macroeconomic factors, investors need to assess whether Nvidia can sustain that trajectory. If their earnings fall below expectations, it could send shockwaves through the tech sector.
That's a great point. Shifting gears slightly, we can't talk about tech without mentioning Amazon. The company has been making headlines with its new initiatives in healthcare and logistics. However, there are concerns about its profitability in these sectors. What are your views on Amazon's strategy amidst this market uncertainty?
Amazon's move into healthcare and logistics is quite strategic, but it's also a gamble. The healthcare market is notoriously difficult to navigate, and while Amazon has the resources to invest, the return on that investment may take time. In the context of current market declines, investors might be wary of how these ventures will affect Amazon's bottom line in the short term. If they don't see immediate results, there could be backlash in terms of stock performance.
Definitely. And then we have Alphabet, which has faced its own set of challenges with regulatory scrutiny and competition. Their recent push toward AI and cloud services is ambitious. How do you see Alphabet positioning itself to weather the current market conditions?
Alphabet is trying to diversify its revenue streams, which is wise given the competitive landscape. Their investment in AI could potentially pay off big time, but it also requires significant capital and time. With current volatility and pressure from regulators, Alphabet will need to demonstrate that these investments are yielding returns. I believe their upcoming earnings report will be critical in shaping investor sentiment.
Well, given all these developments in the tech sector, it's not just about the companies themselves, but also the broader economic landscape. We're witnessing a rising tide of corporate debt and concerns over policy decisions. How do you see these factors contributing to the overall volatility?
That's an essential point to consider. Corporate debt levels are at historically high rates, and if interest rates continue to climb, companies could struggle to meet their obligations. This creates a feedback loop where declining earnings lead to more debt issues, which then causes further market declines. Coupled with potential policy changes from the Federal Reserve regarding interest rates, we're in a precarious position. Investors are right to be cautious.
With the Fed's decisions looming, what should investors keep an eye on in the coming weeks? Are there specific indicators or reports that you believe will be pivotal?
Absolutely. Investors should be monitoring the upcoming Consumer Price Index (CPI) and Producer Price Index (PPI) reports, as they will provide insights into inflation trends. Additionally, any commentary from Fed officials regarding their stance on interest rates will be critical. It's essential to gauge whether the Fed will take a more aggressive or dovish approach, as this will set the tone for market behavior.
That makes a lot of sense. So given all the uncertainty, what advice would you give to individual investors navigating this environment?
My advice would be to stay informed and be cautious. It might be wise to diversify your investments and consider sectors that are more resilient during downturns, such as utilities or consumer staples. Also, keeping a close eye on earnings reports and macroeconomic data can help to make more informed decisions. Patience is key right now. Sometimes the best move is to wait for clearer signals before acting.
Fantastic advice. As we wrap up, can you share your thoughts on how this volatility could shape the future of the market? Are there long-term implications we should be aware of?
Certainly. While volatility can be unsettling, it often presents opportunities for long-term investors. Companies that can adapt and innovate in challenging times will emerge stronger. However, if we see prolonged downturns, it could lead to market corrections that reshape industry landscapes. Investors should be prepared for shifts, particularly in how tech giants operate and compete.
Thank you so much for your insights today. It's been a pleasure having you on the podcast to break down these complex issues.
Thank you for having me. It's always great to discuss these topics, especially during such dynamic times.
And to our listeners, thank you for tuning in. Don't forget to subscribe to our podcast for more discussions on market trends, investment strategies, and economic insights. Stay informed, and we'll see you next time.